Hi everyone, good morning and welcome to today's morning report on Friday the 12th of December with me, Rich Perry, market analyst at Handtech Markets. These European markets are under considerable pressure today, and that has come a couple of things really. We've had the weaker than expected Chinese industrial production overnight. That fell to 7.2%, well below the 7.6% expected, and also underneath the 7.7% that was achieved last month. This just continues this drift of Chinese data into sort of coming out more negatively, and certainly it suggests that growth projections for China will need to be downgraded, I think, as they come through. But certainly it looks like China is a bit of certainly a drag on the Europe in the sentiment today. And the other drag on sentiment is this oil price, which continues to tumble, $59.4 below the $60 handle. And the outlook for when it's going to stop or how it's going to stop is just completely uncertain, really. It doesn't look like it's actually going to be stopping anytime soon. And there's actually a mixed way of looking at it, really. In terms of the consumer, I suppose it is a pseudo tax cut, which is positive for the consumer. But if it's coming on reduced demand, which obviously in coupling with this Chinese data that we've got out today, which suggests that demand from Asia, which continues to fall, it just looks like reduced economic activity is one of the drivers also behind the falling oil price, rather than just the supply issue. So that if that is the case, then that is a negative for the global economy. So it just looks like the sentiment is negative. FTSE's off 92 points now, 1.4%. DAX is off 1.6%. So these markets are under considerable pressure correctively wise at the moment, and it continues this decline that we've seen over the past few days. In terms of forex markets, let me just show you first of all. We've got the VIX index, which, as I said, in the last few days markets have sold off, but look at that VIX index spiking higher. It's a considerable increase in the premium that it costs to take out index insurance effectively. So for S&P 500 shorts, the cost continues to rise, and that just shows how people are piling into these insurance contracts effectively for their portfolio long positions. And the volatility in these indices are spiking, so that is something that we need to be bearing in mind. Now, forex markets. Spoke to you recently about the fact that the dollar had been breaking out. Well, that has sharply moved back towards the bottom of this uptrend channel now. It did find support yesterday, but it certainly looks like in the last few days that the dollar is under pressure. And if you look across all the FX pairs that I'm going to talk about in a moment, you will see that several of them are under pressure now in terms of the big positive dollar positions that we have been running, and maybe we're coming close to a bit of a change in the wind, and whether we need to start rethinking strategies in terms of going long the dollar almost exclusively. So that leaves me with just a look at really the data that we've got out today. We've got the US PPI, which is the producer prices inflation. That comes out at 130, 0.1% down on the month expected. But then we've got the Michigan sentiment, which is probably the most important thing we've got to watch out for today, at 255. It's actually expected to improve slightly on last month. The final figure for Michigan sentiment last month was 88.8, but the chart here shows you the prelim number, which was 89.4, so slightly higher. But the consumer sentiment remains at highs that's not been seen since 2007. So we're still looking positive in terms of that, but it remains to be seen what sort of impact that has on the S&P 500 and subsequently further market sentiment today. So that makes me look at the chart of the day now, and that is silver. And the silver price has been moving strongly higher. We saw that move higher on Tuesday on both silver and gold, sharply higher. And that move on silver has now broken that big downtrend that we've seen intact since July 2014, so July this year. And that has been decisively broken. We've broken above the reaction high, importantly at 1670. But that sort of now brings us into the range of the next key reaction high, which is 1780. Is the next level that we need to be watching out for in terms of key resistance. But the thing I find interesting about this chart is the 21-day moving average, which has been a very decent basis of resistance through the sell-off, which has now turned around and was provided support at the beginning of the week. And it is certainly something that I think we need to keep an eye on in terms of being support. It comes in at 1643 now, so a little bit below where we are at the moment, but that is certainly an indicator that I'm now going to be looking out for. Looking also at these momentum indicators, which have been improving. MACD lines turning into positive, stochastics nicely in positive in strong territory, and also the RSI continues to push higher as well. So a nice improvement in these momentum indicators in the last few weeks, and silver is looking increasingly positive. Over the last couple of days, we've had a couple of sort of almost doji candlesticks, very neutral candlesticks, almost opening and closing at the same level. And if I show you on the intraday chart, you'll see that this sort of manifests itself as basically a consolidation over the past few days. We're sort of waiting for the next real move to come through. We've got the support on this chart. If I can get my cursor over it, 1687 is the key level near term, but it certainly looks like the pressure is sort of building to the upside. The hourly momentum indicators have just settled down a bit and become a little bit more neutral, but certainly the RSI looks to be forming support over the past 3 days, continually around that 40 level and starting to push higher again. So it looks like the silver price could be building for a break above that consolidation high that we saw the other day at 1733, and then, as I said, on the daily chart, we need to then push towards a test of that 1780 mark, which is that key October high. So the outlook for silver seems to be improving again. So if that is continuing, then we need to break above that 1780 level. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.